you've had to kind of sort out the balance sheet a little bit in terms of obviously COVID's impact, cost structures. You've had to negotiate with Greenstone with regards to the convertible notes. So I assume you've been involved in both of those components. Can you just talk us through the numbers, the financial numbers, please?
So yeah, you're absolutely right. There's been a lot of restructuring that's gone on since I've been involved, and I think it's important to point out that debt that Greenstone converted was actually not anything to do with the Marimaca project itself. It was to do with another development stage project. It was non-recourse to the company, but notwithstanding that, because we own the subsidiary, it was consolidated into our balance sheet. It caused a lot of confusion. And so, as a company, we made the decision to ask Greenstone to convert that debt and therefore take it off our balance sheet, which they gladly did. So right now, in terms of debt, actual debt, we have a working capital facility, which was provided by Greenstone to us when coronavirus hit, just to allow us to not have to raise equity capital at that very low price we were when the coronavirus pandemic started. So that's a $6 million facility. That gets us right through to the end of the year. And then in terms of other debt or liabilities on the balance sheet, we have some option payments on our land remaining that needs to be paid over the next 18 months. It comes to about bit over $9 million.
Okay, so there's like a fair bit of tidying up to do. So let's be clear, there was $19.2 million which you removed from your balance sheet with the Greenstone deal. But tell me about that. Did they want to convert, or was it a case of you didn't have the financial wherewithal to be able to meet the terms and repay them? And in which case it was a reluctant conversion, or did they come gladly skipping into the project?
No, it wasn't a reluctant conversion. They were always intending on converting that debt into equity in the subsidiary co. It's relating to another project called the Berta project. And so, really, it was non-core for the Marimaca company as we see it. The new Marimaca, as I'm talking about it, where we've rebranded it from Coro Mining to Marimaca, where our exclusive focus is really on the Marimaca project. And so, Greenstone were very happy to convert that debt and then take that asset basically under their umbrella.
So they've taken Nova and SCM, I think, Sociedad Central Minera Berta. Where are they as an equity holder in Marimaca then? Where are they up to now?
So they own about 24% of the head code, of the list code.
Right.
And prior to that, they owned about 58%, but they in-specied out a lot of those shares to their underlying LPs. So those shares are now in the hands of their LPs. Which means those LPs have voting rights over those. And then the other large shareholder is Tembo Capital, another private equity fund.
Both out of London. I assume you're dealing with the London guys. So you did break down some of the other moving parts there, the other debt components. So just go over those again for me. Just want to understand where they're at, how difficult they will be to manage.
We have a working capital facility of a total of $6 million, which is we've drawn about $4 million, and we have a bit under $2 million left on the balance sheet for that. That's really to allow us to fund ourselves to the end of the year without needing to raise capital.
Right.
I think I haven't had this discussion with Greenstone, but I assume the intention would be that Greenstone and Tembo would roll that working capital facility into any capital raise we do. And then in addition to that, there are option payments still due on the land at Marimaca, of which about $6 million is due in the next 12 months from our last accounts, and then $3.6 million due post that.
Okay, great. Okay, thank you for that. So what are you going to do about it?
We'd obviously have to raise capital at some point and pay off those variety of liabilities owing. The benefit we have is we have two large private equity funds that have basically been financing this business by themselves for the last couple of years, really keen to stand their ground. They see the value in the project. So I don't think raising new capital is going to be an issue. But one of the things we are looking to address as a company is just the number of institutions we have on the register and the free float available to buy shares. It's probably one of the things that's holding us back is just that overall capital structure in terms of shares and where they're held.
So how are you going to address that?
So we'll go out and raise capital from the market, I would expect.
But in terms of getting the balance right between institutional and retail, how do you manage that is the question.
Well, we have a fairly reasonable chunk of shares in the hands of retail right now. And so at the moment, my job is really focused on getting out in front of institutions. And then we are pushing out towards more retail discussions. And so that's through brokers, broker dealers, platforms like this. We'll start doing more video format interviews and things to get out in front of the retail crowd. But what I found, which I found really interesting when I joined and started marketing the company, is very few institutions, and the big institutions that are big players in this space, very few of them have heard the story. They kind of know a little bit about Coro and now Marimaca, or they've heard something, but when we actually present the story to them, they're like, "This is not what I remember it being when we last met this company." So, I think there's a lot of groups that we can still meet and a lot of work that we can do on the marketing front.